Hi, I'm Cathy Sabater, mortgage planner and proud veteran, here to talk to you about why you should not let $80 stop you from buying a home. Let's be blunt. A lot of buyers right now are not playing it safe. They're stalling. They're saying, I'll buy when rate starts with a 5. I'll buy when the payment feels perfect. But while they wait, the market is moving, right? And it's moving without them. And the gap between where they are and where they could be is getting bigger. Every month, let's start with what's changed already. Earlier this year, mortgage rates were over 7%. Now we're in the low and mid sixes, give or take, depending on the day and your scenario. That might sound like a small shift, but it isn't. On a typical $400,000 home, that dropped, right, already knocks off around $400 a month from the payment compared to the peak. $400. So every single month, right? That is real money. That's your money. And it's already on the table today. Now let's talk about the numbers everyone is obsessed with. 5.99% or lower. I hear it all the time. I'll buy when the rates get in the high fives. I'll move when I see 5 point something. Okay, let's say that happens. Let's say rates slide from the low sixes down to 5.9 or lower. Do you know what that actually saves the average buyer on the same $400,000 home? Well, it's roughly $80. That's it. $80. That's one dinner out with the family. That's a couple of what? DoorDash nights of your streaming bundle or a coffee habit. Nice, huh? But sure. But is that really worth sitting on the sidelines for 6 months, 12 months, 18 months while the market keeps moving? Probably not. Here's the part most people refuse to look at. While you're waiting for that extra $80 you're already giving up, the 400 a month you could be saving now versus when rates were over 7%. You're also giving up months or years of building equity, the chance to lock in a home at today's price before more buyers wake up and dive back in. You don't pause the market by waiting. You just choose to let it move without you. Let me make it even more concrete. Let's say you keep renting for another year because you're waiting for that magical 5.99. Your rent is, say, $2,500 a month. That's $30,000 a year over the next 12 months. That all goes to your landlord. Zero equity, zero ownership. Meanwhile, you could have bought a starter home and maybe your payments would be close to that same range. But now, instead of paying someone else's loan down, you're paying your own. And if prices move up even 3 to 5% during the year, you'll also miss out on that appreciation on a home you could have already owned. So add it up. You lost a year of rent, $30,000 out of the door, plus potential equity and appreciation you never touched, all so that you can save about $80 a month on a payment later. That is a bad trade. Now, I want you to think about this, right? Let's think about it from another angle. If you bought now and rates later drop to 5.9 or lower, could you refinance? Yes. Would you benefit from the lower rate then? Yes. Would you have spent that entire time already building equity, already paying down your balance, already owning the home instead of waiting outside? The answer is yes. So you get the best of both. You start now, then adjust the rate later if the numbers make sense. That is what serious buyers do. They move when the opportunity is reasonable. Now, when it's perfect on paper, you got to wait a long while. So here's the real problem with waiting for the extra $80. Most people are not just waiting for a rate. They're waiting for permission. They're waiting to feel 100% comfortable, zero risk, zero uncertainty. That moment never comes. Home ownership always involves some unknowns. But you know what's very predictable? If you sit out year after year, you will still be exactly where you are, renting, watching prices inch up, watching other people build equity and wealth and options while you're still trying to time the perfect rate. Let me give you a simple mental check. Ask yourself 3 questions. Number one, if rates never hit 5.99 in the next year or two, am I really okay staying where I am the whole time? Number two, if I can afford today's payment comfortably, and I truly making a smart move by waiting, or am I just scared to take the next step? Number three, if prices go up while I'm waiting, will that erase, most of all, the $80 a month I'm hoping to save? If you don't like your own answers to those questions, then waiting is not a strategy. It's an excuse. I'm not telling you to buy a house you can't afford. I'm telling you to jump in blindly. I'm not telling you to jump in blindly. I'm telling you, stop pretending that $80 a month is the only thing that matters. Because it's not. Your time matters. Your equity matters. Your future flexibility matters. Those things don't show up on the rate sheet, but they absolutely show up in your life, right? And it'll show up in your life over the next 5, 10, 20 years. I'm Cathy Sabater, mortgage planner and proud veteran. If you're serious about owning, stop letting $80 a month be the wall between you and your next chapter. Let's look at your numbers, your budget, your time frame, and compare buying now versus waiting. You might still decide to wait, and that's okay, as long as it's based on real math, not fear, and not myths. Reach out to me and let's run the numbers before the opportunity you have today turns into another year of I wish I'd bought back then. Hi, again, Cathy Sabater, and I look forward to your call.